All right, welcome everybody. It is John. It is 4:30. It's Wednesday. It is June. Let's check. Is it the 16th? No, it's the 17th. Damn it. Well, either way, it's all good. Oh, I just got to laugh. It's interesting times. I want to get right started into it. George, how are you? Everyone, I got disclosure documents to go through first. It's not the 16th of June. That was yesterday, but it is Wednesday. We got that going for me, right? Trading's risky, and past performance, they say, is not indicative of future results, and that's a fact, Jack, only because of market conditions and varying periods of volatility. Of course, we all get to learn about volatility through ATRs and also looking at range, means, and things like that, right? Part of our wonderful array of weapons to use to give us an edge in the markets. That's what I see. All right, so now that we got that out of the way, we got the risk disclosure. Everyone understands if you're a VIP club member, the annual membership's $11.29. What all comes with that? Just wanted to make sure that people were all. This was not just added; it's an old slide, but the breadth indicator was one that we put out for the last one, which was the McClellan modified oscillator, which I find pretty useful and amazing for myself. Actually, we use it in the live trading room. All right, so with that said, let's get to what should we look at. We've got a question about let's go with this. All right, so many of you would say, well, John, that's not 10.0, that's 9.5, and you'd be right, because 10.0 I'm using on the trading room platform, and this is a different computer. So with that said, 10 to 1 or the other, I think we're going to answer everyone's questions. First question up is my friend Brian K. Brian K sent a question in this morning, I believe it is, and it says algo questions if possible. So Brian, I hope you're in the room today. If you're not, you're listening to the replay. I wanted to make sure we started off with you first, okay? In stop loss, is the ticks in ES quarter points? Yes, there it is. It is in quarter point ticks. But if your stop loss is, it's measured by points, ticks, percentage, that will change, or dollar amount. So if you have it, the correct answer would be based on what your risk mechanism is on the algos. So let's go to format strategy. Okay, and we have version 17, version 2 of 18. I just love that 18 number. It's very 18 is a very auspicious number, by the way. So it's good luck to everybody, believe it or not. There's a hidden thing behind there to give everyone luck to using this. So 18 is a very auspicious number, believe it or not. Add 1 and 8 together and you get 9. Boom, better than 8. Very auspicious. All right, so let's go to format, and let's say, for example, if you're only going to say, I only want to position risk $1,000 and I have 2 lots, well, then you're risking $500 or 10 points. So that's how that would work. In your money management, your max trade loss, your max profit, well, that's in dollar amount. True? So your exit strategy is 40%. Trailing would kick in. If it's a last conditional change, it's based on a number. If it's a dynamic exit, it's based on a combination of the difference between past last conditional changes that I'm sharing over here. It's not the last conditional, it's an average of the two. And then finally, compression exit is a combination that it won't even start to work. It won't even trail until the setting of ATRs. Now, what is ATR? Average true range. Average true range in this case, we're not using a daily ATR. That would be insanity. We're using the ATR on a 5-minute basis. So if the trade gets entered into a position, and let's say the ATR is at 4.82, round up, the computer would round up and say it's 5, okay? Because it would round up and say 5 points. If you got 3 ATRs, 3 times 5 is 15. So what's the moral of the story? The moral of the story is that your stop loss isn't going to pick up until 15 S&P points. So the question is, in stop losses, is it if you're trading on your own, you place a stop loss, the market is quoted in every tick. So we're 3108 right now, even money. To get to 3109 would be 4 ticks for 1 point. So there's 1 tick, quarter point increment. So in our calculation, when it says stop loss ticks, we're adding an extra 1 tick. So if the last conditional change on the board here, Brian, and for everyone, this is very important. This is a great question. I love that he had asked this. Let's say it's 3104.75. It's going to add 1 tick. So your stop isn't going to be exactly 3104.75. It's going to be 3104 half, 1 tick. That's why it says ticks. Now, what about take profits? Sometimes the market gets real close to our profit target and it doesn't quite get there and then fails, and then you'll get a trailing stop. Well, this is an optimizable function too. In our back test study for years, we've found that 1 to 2, even 4 ticks, shaving off 4 ticks from the intended profit target will get you out closer. Re-optimize and optimize that. But that function right there, Brian, and for everyone's knowledge, that is why it says ticks. It's adding 2 ticks for taking profit. So if you think you're going to make 5 points, $250, let's say, and you're not using the trailing feature and you're getting out just with a max hard stop or a hard exit, a hard money exit, you can program this to get a stop loss, get me out with 1,000 and take max profit. You can change that and get out at say $500, right? So that's max take profit. And if you have a max take profit and you say, yeah, but get me out a couple ticks, instead of what's $500, 10 points. This is what's 2 ticks minus $500. $500 is 10 points. 2 ticks from 10 points is 9.5 points. So you're actually not going to make $500. You're only going to make $450 because your max take profit ticks, it's going to get you out 2 ticks before. So a lot of times, let's say it's a 10-point run and the exact high of the move is at 10 points. Well, you need the market to trade through you. So you need 10 points and 1 tick to get out of the trade. So therefore, shaving, as I call it, in most traders, professional traders, we call it shaving. You're shaving, you're taking some off the top, so to speak, and allowing the market to trade through you. I hope that answered the question, Brian. So the 1 tick, so your stop loss is adding 1 tick. If you say, no way, I don't want that, I want it right on the number, change that number to 0. So you can that could be optimized and just simply say, well, what's the most profitable trade in a strategy? Should I go to 0 or should I add 14 ticks, which is insanity, right? I mean, you don't want 14 ticks to add to a stop already. So if you already have a big risk factor, why are you going to add anything? But optimizing it, Brian, this is an optimizable function. This will tell you whether you should be adding extra ticks to that extension of your profit and loss calculations. So if you went just a stop, let's say 16. Well, 16 is actually 4 full points, right? So you're just optimizing, and your increment is 1, and you can just optimize that and just see what. Again, I'm not building a strategy in ES with you. I'm just sharing with you how this can work. Okay. And that also so that you know it can be optimized. So if we go back and we say, well, what changed? Format strategy. Where did I put it? Here. It says, you know what? Don't add any. So whatever this strategy, this is not really a strategy, but this said, hey, you don't really have to add based on the prior criteria. So you don't have to add anything. And I don't know what did I do over here? Yeah. See, now I start punching things and I forget. I just altered whatever this strategy was. I said max take profit at $500. So I have to go back and change that. The good thing about TradeStation, if I fiddled with something and I don't remember what settings I were that I did, and I don't remember that I didn't print it out, for example, so I don't have my original strategies, just close the workspace out, and when it says save workspace, yes or no, say no, don't save anything, and your original settings will be right back there. But I changed things just for your education, Brian, to let you know that max profit, obviously we all know that is optimizable. I mean, if you think about it, if we have a daily ATR of 49 points, for example, 50 points a day, right? 50 points a day is what we're doing on a 10-day ATR. Well, that's $2,500. Well, somewhere between $600 and 8,000. No, we probably, I'm not going to buy the high of the day and I'm not going to sell the low of the day, but 50 points, you know, and then go in increment. That's optimizable on what your max profit is, right? So that's going to be done in dollar terms. So if it comes out to its dollar terms is $450, that's 9.5 points. Clear? Cool? Good. Excellent. Man, I'm great. That's how it works. Now, will one optimization override the other? Yes. So if you say, hey, I don't want any slippage, and that's the other term, okay? Slippage, taking profits is slippage. Adding to stops is slippage, right? So I don't want any. You can say, forget it. I want zero. You could say, you know what? I want to use a compression, and I'm only going to use one ATR. I want the compression exit to kick in. You don't have to optimize it. When you optimize something, you're asking TradeStation to back test every single trade for your period that you're asking for and to come up with the most profitable solution. And the difference is maybe in certain cases that the most profitable solution over time isn't the best solution because there's too much risk and too many drawdowns. So what is the cost of doing business to make the most profitable? You may find out that, hey, you know what? I want a system that gets me long on PPS buys. I only want to risk $200, and I want to make $200 every time I get in a market. I want to get out quickly on a one lot. So you double that number if it's a two lot, right? That can be done very simply. You don't have to optimize anything. All you have to do is just change everything to zero, right? Change all your functions to zero. Trade whenever your time frame you want to trade between, say 9 in the morning and noon, and just post and say, you know what, max trade loss $200, max trade profit $200. Change that to a 30-second, for example, and you can get in and out all day long, and this thing will execute under that. You don't have to optimize anything. You can make what I always refer to as hard programs. Hard programs is, this is my intuition. I don't want a trailing stop. Get me in, get me out, turn everything to zero, and that's it. And I do want a dynamic exit. Screw it. Screw it says not, no, put one in. I want a compression, and I want to start it at 1. Yeah, you can do that, and then you can fiddle around and optimize it from there. So, I mean, you might have your own programs. And on that note, so risk reward doesn't filter trades, no, but sets the profit target. Correct, you are right. Risk reward of 1.5 means what? You're risking 1 to make 1.5. A risk reward, you're risking 1 to make 1.5. So I'm risking $100 to make 150. All right. How do you calculate the profit target? The profit target is calculated by the average moves of the signals over time, and that's what the optimization program does. Okay. So how do you calculate the profit target? You can optimize the profit target. So when you go down here, and that's why we originally think of the logic behind this. Do markets go up as fast as markets go down? Well, and this is a bad example because they went up and they went down, but you can see the market went down a lot faster than it went up, right? So buy signals, typically markets go up in stairs and they go down on elevators. That's what I've taught people for years, right? And that's just, I mean, that's just older than could be. I think they used to say at the Board of Trade, they go up on the escalator and they go down in the elevator. You know, that's what the Board of Trade, the Annex building had an escalator. All right, we'll move on. So anyway, the point being is, Brian, that when you have a buy signal, it's different from a sell signal. And so risk reward of buys, it might give you a 1-to-1 risk reward ratio faster. It might give you a 1-to-2. And a sell signal, it's different. It might give you a risk reward of 3.5-to-1. So optimizing your buys, we originally didn't allow that. It wasn't there. We just said, oh, just generally speaking, what's the best risk reward ratio for both buys and sells? And then because the way the dynamics of markets were changing, and we were not getting a lot of dojis on 5 minutes, or we were getting too many, actually, in fact, where every bar was almost a doji. And so then we could optimize, hey, if every bar is a doji, maybe I shouldn't even use the high close doji function on a 5-minute bar, because in the overnight session, or if I'm trading at 3 in the morning, or if I'm trading euro currency, or if I'm trading anything, or if I'm trading the equities market. So for example, there it is. I just do it this way. I'm looking for a high close doji. Well, let's see. There's a doji. There's a doji. The market would consider that a high close doji. That's not after a downtrend, even though that trade would have worked. But I mean, there's a lot of times that on the market, and this again would be a bad example, but there's a lot of times that we were seeing in narrow range environments back that every bar almost seemed to be a doji. So, like for example, doji, 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 doji. Which one do you trust? I don't know. So again, the point being is if you can optimize for high close dojis or not. Format strategy, go back and get the format. So we broke it down so that a risk reward ratio of a market to go up might be different than a market to go down. And the risk reward ratio on a high close doji might be different than a risk reward ratio of a low close doji. And and it may seem like overindulgent of information and too much information to optimize a signal, but it gives the user a chance to discover something about the markets that maybe they had the impression that high close dojis worked all the time, and maybe they don't. And maybe the high close doji shouldn't be 1-to-1. Maybe it should be 2-to-1. And that's the neat thing about this. We gave the users the chance or the option or the alternative to figure out that, extract that information, that data, those facts for themselves. So whether you're trading a 30-second market, a 60-minute market, whatever your interest is, you have the ability to backtest, create, and figure out what works buys versus sells, which is why in the razor focus class, I know some of you were around when we did this. When the razor focus class was around, what we did is I said, hey, we built a long only SPY. Why? An end of day long only. Why? 75% of the time the market goes up. Okay, so for those that want to be long exposure to the market, long only. If you're not interested in trading SPY from a longer term perspective, what we created was a 60-minute long only program. Why? Market goes up more times than not. In bear markets, you're going to get clipped, right? It's going to give a buy signal, but with trailing stop functions, here's a period where back in February and March was the worst time ever, and there were still a couple trades that worked well. The long only equity curve. Now, we did this back in January. It's kind of interesting where it made another new equity all-time high. I haven't altered this strategy. I mean, this has been since this is the original file. The point being is I wanted to give people a chance to say, hey, if you're a long only guy, there's a long only. If you're an end of day guy, there's your end of day. If you want to know what the market is doing and you want to take shorts and you're bearish, here's a short only, right? So in those times that the times get crazy, you could see that only the sell signals, it filtered out things. Now, the irony is here that it too is near. It doesn't have as smooth of a curve. Why would you figure it doesn't have as smooth of a curve? Because since 2015, on average, the market's gone up. It's not even as profitable as anything else. And why is that? Because the market generally goes up. But it is near an equity high and it's done well. So, I mean, I look at from an old equity high to a new equity high. Can you survive drawdown? It's not that bad. It's not that great, but it's a great indicator as to find out, hey, if the system's short and I'm thinking of buying a breakout, that might not be all that great. Lastly, we created what was called the long and short. This took both buys and sells. And again, this one, it combines and it optimized out that it would reverse out a trade. And again, it's neither here nor there. When I say it optimizes out, let's go to format strategy. It reverses out, meaning if it was long and a sell signal and it didn't quite get stopped out, but a sell signal took over, it would get you out. And that's that reverse signal right there. All right, that function. So again, stop loss here on a spider, 5 ticks. So if your stop is 311.57, your stop out is going to be 311.52. It's going to add 5 cents, 5 ticks to your spider trade. Anyway, so whether it's stocks would be in cents, and in futures a tick, the notional tick value. In bonds, it would be 1/32. Okay, I think we covered that enough. Is there a way to get into an existing open strategy trade with full automation? If a signal is already in a trade on your program, meaning it went in and you say, hey, I want to join that automatically. No, you have to enter it manually. The reverse is a question that we get, and I think you guys must have ganged up on me because it's the opposite. I don't have this automated, or I do have it automated, and I want to get out right now. What do I do? The first thing you do, you're in a trade, and you see the profit target down here, right? The blue. And you go, shoot, I'm already in a profit. I got to go. I don't like the trade. John called out in the room, hey, override the system, get out. How do I override it? First thing you do is open up your platform, generate strategy orders for display, auto execute, turn those off. Turn it off first. Then go in. And then you can now go to your dome. So always have a dome up as well, the depth of market. And then have your dome, and then you can manage the trade that way. Why do I do it that way, and why do I recommend that way? Because let's say you can go in, and if you're short the market and you say, hey, I'm in a profit, I want to buy it, you can go ahead and buy it right now. But by the time you then go to turn the system off and the market crashes and then the system gets filled, you're now long the market and you want it to be flat. So turn the system off and then that overrides and then execute. It only takes a click. It's not that hard. As I've taught many people, more times than not, the system will give you a chance to get in. And if you understand a PPS buy, more importantly, Brian, if you go over to format strategy, and this function here is very extremely dynamic. Should I get in at the market? Yes or no? So if it's false, 1, true, right? False, true. So if that's the case, do you enter into a market order? You're not getting into a market order. You're getting in. It's pre-programmed for a tick above the signal bar's high. So, for example, or a tick below the signal bar's low. So in this case, if you know that, hey, I'm not going to get in, and I often say that in the trading room. Hey, if you're going to get short, if the market, instead of getting short on the bar, if the next bar it opens up and it trades higher, then stop yourself in a tick below or 2 ticks below the bar, the signal bar's low, for example. And you'll see that a market order would have gotten in on the open. This got in a tick below the low. So again, that's how that reads. Okay. All right. Yeah. So again, Brian, there was a period where every high and low close doji, every bar on a 5-minute was like, you can't take every high and low close doji. They weren't qualified, and that again, to your point. Format strategy. Let's format strategy. Define. We created this. This was another thing that was amazing. High close doji. Risk reward. Optimize it. Momentum. Yes or no? That's a true false statement. What does that mean? Momentum. Well, we've talked about this and taught this many times, and I think it's a great opportunity for me to review it for you right now. What that signifies, if that's turned on, 1 being true, right? 0 false. If that says, do we go with the momentum? This helps to filter out the difference between a high close doji, meaning the market's gone in a downtrend. There is a doji and the market closes above the high of the doji after a downtrend. Sometimes the market's in an uptrend, there's a doji, or there's a sideways channel, there's a doji, the market closes greater, and then 2 bars later, it just crashes. That's not the essence of what the high close doji was. High close doji was a reaction off an action. And the action was after a strong downtrend, the market formed a doji indecision, and then buyers came in, closed greater than the doji, and then you got a key reversal. That's the power and the nature of the high low close doji. And the low is the reverse of the downside. So we said, shoot, we got so many of these dojis, we need to filter this out. So let's define momentum. What is momentum? Do we use it? Yes or no? So 1 means yes. Momentum length. What this means is, and it's optimizable. Once again, you can go and you can optimize this. So what does Hcd momentum length mean? It simply means that if the market's down, the close above the doji's close, in this case with the setting of 4, the doji, and I don't have an example on this board right here, but let's pretend this is a doji. The close here has to be lower than the low or the close of the past 4 prior bar. So if the close of the doji is here and the 4 bars prior is higher, then that would be considered, and the market closes greater than the high of the doji, that was a high close doji because that defined a downtrend. Okay? So there it is. JR, J, and then R period, J last name R, has a great, if you go to the balances, positions, order tab, select strategy positions, you want the positions matched to equal true to make sure you're manually entered in sync with the strategy. Thank you, Jake. Nice. And that's people new to the algo. Perfect. So again, there were functions here that you can actually filter out what a high close doji is, and then say, oh, and by the way, I don't even want to get in on a high close doji unless there's a moving average and the high close, the market closes greater than a moving average. What kind of moving average? Moving average of the high, which is 1, a moving average of the low, which is 2, or a moving average of the 3, which is the close. So if you wanted to optimize and filter out something, if I wrote this out in paper, I would say, I only want to take high close dojis after there's a downtrend, define a downtrend. We just did with momentum and momentum length. And then I only want to get on the high close doji if the bar that closes above the high of the doji also coincidentally closes greater than a moving average of, in this case, you'd want either the close or the high, right? Because the moving average, if the market closes over a moving average of highs, wow, it's closing over the average of past bars highs. That's a key reversal signal, right? Market closing greater than past or prior highs. How about the average of the past or prior highs? So you really, is it overkill? Hey, if it's your money, Don't you? I wanted overkill. These are the questions that I wanted answered and that we came up to, which is why this is number 18, and this is the bomb. This is the epitome of how to create a strategy. You just got to know what it's capable of doing. You can have long only, short only take high closed dojis, only take low closed dojis, only take PPS, not take a PPS. You can filter it out with MAs. You can override it and say, screw that. I only want to build a system if it gives a buy signal over a 5 period of the highs. And can you do that and optimize it and find out if even your own ideas, you don't have to optimize and accept what TradeStation's saying is the best. You can do it yourself and then see whether or not you like those results. That's pretty cool. So, I think we got that question. Is there a way to do a stop loss on the same bar entered? If it gets $1,000 loss right after the trade, to take it out before it gets worse. Yeah, that's the max trade loss. So your job would obviously be to know how many points away is max trade loss, is $1,650. Get me out. What is an ideal ATR to look for? What correlation can be drawn between ATR, stop loss, targeted risk? Okay, what is an ideal? Well, when that is a question. What is an ideal ATR to look for? What is an ideal ATR to look for? Okay, so how we set this board up here, if you're trading futures, okay, average true range, we're back to 87 points. So either if you've traded ES before and you've been around a long time, you can take a slice of time, take a chart back, and just go back and take a look at E-mini S&Ps at any point in time and do a little bit of back testing. You could do it manually. You could do it strenuously by writing code. You could easily go and take a look and just put in average true range. And that's another simple Simon Says type of way of doing it. And that's why you can add that there, which is one of the reasons why I even have it up in the room for everybody so that they have a reference point. So if you take a look at where were we in March, this is, again, what does it say? 10-day. And 10-day ATR at one point got to 200, let's round up and say 250 S&P points, E-mini S&P points. That's the 10-day average, 250 S&P points a day. The 5-year average, I think, is like 28, something like that. So if you take a look back through history and you just go back and say, gee, 87, oh, that's not too bad relative to March. But if you go back to any year that you want and say, well, what was the heightened level of ATR in a mini crash back in December? Let's go to view data window because I can't see that small. The peak, see that little bump right here in ATR? That's a pretty high number, right? Let's go look at what it is. That's 84, the max for the year after a major crash. So what's the normal in the market when it rallied? 29. So 87 is not a normal. That's our normal now. That's a slow business time period. Back in 2019, March of 2019, that was after a big sell-off. That was a big crash, man. 90 S&P points was unfreaking real. That was December before the big run-up in January, before Christmas Eve of December. Remember, this was the congressional election over here, and that was, again, the high in the market back in September of 2019. We had an ATR of 20 points. I mean, that'll put your ass to sleep every day. 20 handles in the S&Ps, we're doing that every 15 minutes, right, Brian? So again, you're dealing in volatility that on an average day today is a slow day is 87 points, was probably one of the worst volatility times in history back in 2019. So I mean, what is an ideal ATR to look for? Well, when we go back to historic mode or the mean towards history, it's around 30 points. So, no offense, you're only 3 times the normal ATR in a 5-year average. I hope I statistically put that in reference for you. So what can correlation be drawn between ATR? Well, if you're using a daily basis, what is the ATR that you're using? Well, 90 S&P points, I'm going from 87 to 90 to round up just those 3 extra points, right, is $4,500 last I checked, right? So 90 points, 9 times 5, 45, $4,500. So if you have a $4,500 daily trading range, notional value worth, obviously, you got some heavy duty volatility. And so that's how you could say, maybe these market swings are too rich for my blood. Maybe I should use one lots. Maybe I should even use micros, or more importantly, maybe I need to cut down the time frame and go to like 30-second or 1 minute if I want to trade like the old days where I could risk $250 per contract. Okay. That's the function of ATR. It's a reference point of periods of volatility. So when I tell you, hey, gang, you think you know it all? You think I know it all? I tell you what, on a normal day, I've never really had a normal day. With our normality right now is 80-point S&P days. That's when the market's calm. I'm sorry, I'm not laughing at you. I'm laughing at the market. On a calm day, we're like 3 times the 5-year historic average. So that's there it is. Yeah, I'm glad that helped, man. I'm glad you asked the question. I'm not laughing at your question. I'm laughing at the lunacy of when I say, hey, gang, this market is off the charts volatile, and people go, hey, look, it's great. Hey, volatility is a two-edged sword. Everyone knows that, right? You need volatility to make money in the markets, and it's not a get rich quick game every single second of the day. You hit the market, take a little time away. Markets are going to go through periods of insane volatility. They're going to die the volatility. I mean, period of insane volatility, 250 S&P points is insane volatility. And then we're going to die out. Well, no offense. Here we are. We were sitting at around 75, 74 points. Now we're back up to 87 points. I mean, relative to March, this seems like a calm day. Relative to January, this is off the charts. Relative to the last 5 years, this is insanity. Relative to just December or January of 2016 when the market crashed, 87 points. That was like unbelievable. Last year's December, 90 points was a crash. The market crashed in December. And a 10-day ATR was 85 points or 89 points. Wow. Thank you, man. I appreciate you being with us. And I'm glad you're here because I hope you're getting insights. I hope I'm giving you the insights so that you can make better trade decisions and understand the algo optimizer. And that was the whole function of what the PUG was about. It was about monthly meetings. Let's get together. Other guys like Jay are adding some 2 cents and helping other traders. Other guys saying, this you have the power to alter, to change, to create, to change with them, to modify and to modernize and to adapt with the changes of the market, and it's in your power. That's it. That's what Algo 17 Extreme did. It's amazing. I think I got everything off the charts on your email. You said you're trading futures in ESCL and GC, and those are 3 dynamic trading markets for day trading in our environment. So you're on the right path. All right, let's get to Norm. I know Norm. I'm sorry, man. I'm old. I used to watch. You'd space out. You'd watch TV, and I see your name, and I think all I could think of is the the cuddly, happy-go-lucky guy on Cheers. When every time he walked to the bar, he'd go, Norm, you know. And Cliff. I mean, so it's almost like I feel like you're already a part of my family just from your first name, Norm. Thank you. And please take that as a compliment. Hi, Mary. Of course, people know if you send a question to Mary, she's going to march in my face and say, you better read this guy's question. You read Norm's question. So, you know, Norm's got the secret sauce. He's got the secret. So hope the both of you are well. It's Norm from Wisconsin. Go Badgers, because Green Bay, I can't say go Packers because I'm, you know, Chicago Bear. I can't do it. But anyway, Norm. Stevens Point Beer, Hayward, Wisconsin, up there, good fishing. Anyway, all right, I'll move on to your question. Baraboo, Wisconsin, great times, great memories. Could you ask John if there might be a preferred method to turn off an algo once a trade has been initiated? And we just answered that. So I think you guys ganged up on me to ask these questions. And manage the stops by yes. So Norm, did you get that? Because we covered that, but I will cover it again. So you're in a trade and you say, you know what? I don't know if I like that trade. Siri says knowledge is good. I wasn't talking to Siri, but that's cool that Siri answered that. Knowledge is good, Siri. Thank you. Is knowledge good, Siri? All right. I muted her. All right. Let's see. We have to go over back to the strategy page. Let's do that. Come on. Close out. And let's go to the ES strategy page. And so basically you get in a strategy and you say, I'm short, I sold the low, I want to change that and see. As you can see, strategy. Without optimizing. Auto execute, turn that off. Just turn auto execution off. That's the fastest way to do it. All right. Another way, you can go to balances, positions, order tab, select strategy positions. You want the position match equal true, make you manually enter. That would offset the trades though. But this way, you've turned off the automate execution trade. So therefore, it's not going to offset the order. It's going to allow you to want to, it's not going to offset that order. It's going to allow you to manage it. So you can say, well, if I'm short, I'm going to put my own stop in, or I'm going to get out of one quickly. And that's how you do that. Okay. Norm, thank you for your question. See, I noticed an algo class the week of March 3rd with the topic. I was focused on more advanced things, not just the initial algo class that was canceled. Are there thoughts or interest in another class like that? Well, you know, it's a good question. So also, I noticed algo class March 3rd on top of it. We had a mentoring class that we were going to do. We canceled that. COVID-19. I think that's what you were talking about. So seminars, things like that, in person. Yeah, we canceled all that stuff. But we are having a special new class, a summer strategy class. I think if everyone liked the Razor Focus class, I mean, I know things can get better, but it's pretty wild. I mean, those are pretty good strategies just in the last, month, 2 months. One of our members said, I don't know if her file got lost or whatever, but I think a month ago I sent her the file, and I hope from whatever point you look at, it's done well. So it's a great indicator, and as well as a great trading model. So the point that I wanted to answer your question, is there another interest in a class like that? And we are creating, because a few people had asked me to put together, they wanted a new class. And we're doing one in July. We haven't really announced it, but if you're interested in his strategies, it's going to be what is it going to be? It's like 8 hours worth of training over 2 weeks, 2 nights, Tuesday, Thursday session, but it's going to be just pure strategy building and also going through the algo optimizer. We're going to create a VXX together. That's the volatility, a Russell, I believe the biotech, and we're going to re-optimize or create a new strategy for the SPY, which would be kind of not ripping off what the razor focus is. So when we did the razor focus, if you notice, I haven't opened up the strategies and shared the settings. That was a private class, and those files that I created, or this workspace, belong to the, in my humble opinion, who came to class and paid for the class and studied the class and got this worksheet and this workspace. It was theirs. So it's not mine to take that and now resell it or give it out in the trading room for that. I just can't do that. And I don't. I mean, I will share from time to time, hey, this thing went short, it covered, and blah, 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 but I don't share the strategies. So the summer strategy class is going to create 4 different strategies I think are going to be dynamic. I could do as a bonus the Qs, the NASDAQ 100, I think will be dynamic because everyone and their brothers and sisters in the institutional fund world believes it's only the place to be is technology. And over the last few years, you know, quite frankly, if you look at the listing of the NASDAQ 100, it's pretty damn impressive of all the companies that are in there and who's making money. So anyway, that's the link. If you're interested, you can click on that, find out. We haven't even sent out and to be honest with you, it was 3 people who had asked me if we would do something again, and there it is. Okay, so there it is, Norm. That's and you weren't the one, so of the 3. But thank you for your question, and I hope Wisconsin's doing well for you, man. Isn't it summer? July that Milwaukee does Milwaukee Fest, Summerfest. Is Summerfest still going on? If Norm is in the room, that would be cool. If he's not, he's going to listen to the thing and send an email back. JR, so will the book be available to us earlier? You know, the funny thing is that you mentioned about the book, Jay, is that the publisher sent me today the page proofs now for the book. So between now and they want it back Monday, I have to read through each page of every book of a technical analysis book to make sure the page number is even right. The charts that say figure 7.18 is 7.18. The T's are crossed, the I's are dotted. I have to do all that, and I'm going to go cross-eyed. So that's the page proof. And you don't, you know, I guess I could print it out and read it and mark it up, but then I got to go back in and do it on Adobe and blah, blah, blah. So would you get that early? I'm going to be hopeful I don't blow my brains out, but I'm not sure. Let me get to ask that question next week. See if I come in the trading room next week, ask me, John, did you edit that book? And then I'll let you know. All right. Thank you for your question. I'm not looking forward to the project. I'm telling you that. I'm done with this. All right. So let's move on. Jude, you know, everyone knows Jude. He's in Singapore. I love Jude. I mean, with a name like Jude, how do you not play Hey Jude all the time in a room? And we haven't played that in a long time. So let me see. Norm, I think I got everything answered for you, and I want to make sure I did that. You guys take the time to type your questions up. I want to make sure I take the time to answer your questions. So let's see. Jude says, for a question regards to managing ongoing. Okay, so did you just join Norm and Brian, Jude, and an ongoing ES trade? I know that we should trust the algo system in more normal trending lines, but you said none of us have ever traded, and we haven't. And I just think the ATR proved that, right? So the question is this: if I set the algo system and ES confirmed to off, and the price triggers and enter a trade, so how do you really manage and monitor this trade? Real simple. You can, if you are confirming the trade you want to do it, then auto confirm says if it's off, it's going to auto execute. If it gets in the trade and you don't like it, turn it off. We just went through that. All right. are there times in the trading that you shout out to override the 7, exit to cut the loss? And a lot of times, because I'm using the system's going to get you in and out based on its backtest study of the period of volatility. But if you got a buy signal and there's no volume, and the market gives you a buy signal like a buy signal, like in this case it doesn't. I'm just saying, what if the market gives you a buy signal here and the volume histogram is going to 0? I would say, hey, gang, that trade's it's only up a couple ticks. There's no volume behind it. You may want to scratch that trade. How do you do it? Boom. Format strategy, or do it the way Jay pointed out. Turn off the auto execution. Have your dome up, flatten trade. It's a button. It'll be right up there when you have your dome up and you're in a position. Just exit, close out all position. One click, boom, done. All right, you're out of the trade. Other times you shout out to take the profit and exit. Yes, you get a trade. How many times have we seen this? The market goes down and you're like up like $2,500 on an ES. All right, well, what's $2,500 again on an ES? How many S&P points is that? What's the average? You didn't sell the high, you didn't buy the low, so it's in the middle of the range possibly. You have a $2,500 profit and you still want to milk this thing? Guess what? That's why I say, based on the strategy system performances, if you look at your own strategy performances and look at the ATR, you'll say, gee whiz, $2,500, that's 50 S&P points. The market just gave me in a trade 50 S&P points, and I don't want to take the profit. Well, you can override the system in that case and take the profit. If you want to trail a stop better than the ES, the system would, you can do that, right? The system's going to make you money, but unless you have a max profit of $2,500, it's not going to get you out, right? It'll probably get you out with 1,700 or 1,500. I've seen that happen, and it comes back and it's like, okay, it still exited the trade, but you left money on the table, right, Jude? You see that all the time. And where do I get that knowledge? Because I'm insightful? No, because I know performances of trade strategies. I know what the ATR is, and $2,500 is 50 points in the S&P. And when you take 50 handles out of the S&P, and you're in the trade late and it's already got a 40-point range, baby, the odds of the market going and expanding much more is slim to none. And there it is. All right. I love the question. I love the interaction. This is one of the best PUG meetings we've had because these questions are right off the chart and I love them. So I thank you guys. This was really cool. So would you mind going through criteria? I think I just did. Let's see, do you rely on which indicators like LCC pivots and volume? And I just went through volume. So there you go. You caught me live. You just caught me doing what your question was live without even reading that. Let's see. So the volume is one of my, you probably hear me talk about that in the room all the time. If there's no volume behind a momentum of the trade, then that it's like, and you've had this big upside, it's time to cut the trade. I tend to exit too early with hard stops once I reach the average profit target. So, but if that's a, I don't know if that's exit too early. You know, I exit too early too a lot of times on trades. And then 2 days later on a position trade, for example, on a stock, and then 2 days later, it's like, man, I'm grateful I got out. You know, in this environment, if your average profit is rising and your trend of profitability is going up, then you're doing everything right, and you're trading in a historic environment that's just, I mean, it's insanity. They just literally let the lunatics run the insane asylum. It's One Flew Over the Cuckoo's Nest here, friends. If you haven't seen that movie, Jack Nicholson, it's a sad ending, very sad ending. But you know what? It's funnier than hell if you remember that movie. All right. This is from Rick, and this is a simple question, and it's not about algo, but it is about PMC. All right. So let's see, Rick. Let's go here to SPY because he wants to know. And if we take a look at SPY, enter. So why is it 0? His question is, I'm using PMC on SPY and I see a solid yellow 0 values in little boxes in the black bar. It only happens with SPY because this is a relative strength tool comparing the relative strength of the underlying chart to the S&P, and they're going to be equal. So funny, if you go, because the E-mini S&P isn't the SPY, and the E-mini S&P trades 24 hours, so its performance can change relative to the cash market. You might see a little change there relative to the cash market, which is pretty weird. I don't use that at all, but you can go IWM and compare another ETF to the S&P 500, but you can't compare the relative performance or percent change of a market of the SPY to the SPY. You're comparing a product and its relative performance in terms of percent change to the S&P. So even in the Russell, you could see that it started to show improvement in its relative strength performance, its bright blue relative strength performance, and in terms of percent change, it started to outperform up until about a week ago. All right, so that's the Russell. Here's the QQQ as the NASDAQ outperforming relative to the S&P. And the Qs relative to the S&P outperformed. They've been outperforming ever since. They're underperforming in terms of percentage to the SPY, which is an interesting observation, right? Except for just today and yesterday. So in terms of trading ranges and percent greater rate of returns, the SPY's been outperforming relative to the Qs. It may not think that, but it has been. And then finally, if you want to check out how we use this tool, is comparing an ETF and a stock relative to the S&P 500. The theory is real simple, that institutional traders, money chases money, and a stock that outperforms relative to the overall market means it's on fuego, there's strong momentum, there's something going on, its price is tearing to the sky, and money chases money and people want to get into it. But when a stock is making a newer high and the relative strength is underperforming the market, it's showing relative weakness. And you want to start looking at tightening stops up like that and start looking at a potential turn in the market. That's why with the PMC, it's a totally different indicator, and it's regarding the one tool that least of the masses understand or know anything about in terms of comparative relative strength. And what we've done is created this indicator to identify a market in 4 stages. Weakening, red. Weakening is dark blue, lagging is red, improving is fuchsia. It's starting to improve, and that's the sweet spot when the market gives a buy signal and you start to see the relative strength improving. That's the sweet spot of looking for buying opportunities, and then outperform. All right, so God, that's good stuff. So these BD, all of these meetings are recorded if the recording works. Yes. And so your question is absolutely. And so for that, it is our time to say goodnight. I hope I got a lot of, guys, I'm proud of you. If you're asking these good of questions, that means you're getting things accomplished and you're seeing successes. Hopefully, at least you're understanding how to utilize the program. I encourage you, if you would like to know what else is new with Person's Planet and what the next big class that I'm planning to do, it is what I call the Summer Strategy Building class. It'll be in July. Sign up for this right away. We're not going to be mass marketing it. It's not going to be in a, first and foremost, this is kind of a very elite group of people. And the tuition is extremely reasonable. And we are going to, it's almost, well, anyway, we're already committed. It's something that I would want to do for a lot of people that want to build a strategy, go through it, have it, just like we did with the Razor Focus. And but this time we're going to be focusing on other markets that I think that are going to start to, in my little humble opinion, be the hot and bothersome and the cool places and the snazzy place to be as we get into the back end of 2020 with the election, and as we get into 2021. And I think that's what we're going to be wanting to be looking at. So whether it's the IWM, and we already have one in the SPY, and my humble opinion, and I'm more than likely going to shake things up, but biotech, medical, I think the biotech space, and then the NASDAQ 100, man, I think it's going to be a very dynamic class to put together some swing trade strategies and to build that so everyone has those in their very unique. And again, it's a lot of education that we'll be going through in those 2 weeks. So that's the link if you're interested. I look forward to seeing you guys in the trade room tomorrow. Thank you all for your time tonight. And seriously, man, great questions. I'm really happy. It really made me happy that we were engaged by this many quality questions, number one. And number two, I really appreciate other members like Jay stepping up and saying, here's another way and helping out. So thanks, Jay. So if you miss classes are recorded. If you miss a night, yes. No, the classes are always, those are recorded, number one, and they will only be available for the members. The workspaces, just like I did with Razor Focus, everyone will not only get the settings, but you'll get the, why should you do the work? I'm doing the work, I'm teaching it, and I'm giving you the workspaces too. So you will get the workspaces. So you the recordings and the workspaces, Tuesday and Thursday, 7 to 9. And it's going to be, just strategy building with decent strategies. So decent is not the word. I'm looking for really good optimized programs to come out for the back half of 2020. So thank you all very much for tonight. And again, we'll put this out in an email invitation for those that are interested to joining us. But in the meantime, that's the link that you could go, personsplanet.com/strategies.html. That's it. Thank you all. I'll see you in the room tomorrow. Have a great evening tonight.